Good morning, everybody. Welcome to a brand new week. Damn, I'm about to drop my phone off the balcony. Welcome to a brand new week. I'm going to be dropping down a very key, quick gem of a video showing you guys my simple ICT concepts. I'm going to be going into the chart. I'm going to be breaking down everything down. And I hope you guys enjoy. I hope you guys use it and find a way to use it into your own trading. It's so simple, and it's been a game changer. Literally, it's been a game changer since I traded the futures, since I switched to ICT concepts or incorporating them. You know what I'm saying? I already knew how to trade before. And now we reap the rewards. As always, if you guys enjoy, like, comment, subscribe. If you guys want to join the movement, just email me and hit me up on Instagram. Deuces. So, I just want to start off by saying that I already had a very clear understanding, right? Previously, before learning ICT concepts of market structure and price action. I already have a very great understanding of both of these things, right? So when you have both of these things, right, and incorporating ICT concepts, it will only help now. Now, as like always, we're going to start off on the daily time frame, all right? We're going to start off on the daily time frame, and we're going to be marking off our bias, okay? We're going to be marking off our bias starting on the daily time frame if it can give us to it. When I'm looking at the daily time frame quickly, I look at the previous couple of days candles, right? And in this instance, Thursday is invisible right now. It should be right here, right? So we're going to be looking at this one and then this one. 2 days ago, we get a bearish engulfing candle, right? And the next day after that, which is the previous day, we have price rejecting to the upside and closing weak momentum bearish. So off the bat, I already know that when I go to the lower time frame, I'm most likely going to find a bearish bias because the daily is giving me a bearish bias, okay? Now, when you come down to the 4-hour time frame, we're going to go to where price is at in current time, and it's going to be right here at 6 a.m. to the 10 a.m. candle, right? And we're going to mark off a couple of things, right? I'm going to give you guys some gems right here. I'm going to give you guys a couple of things. Some of the things that I used to not do and now I do is mark off key areas, right? Like session highs and lows, daily highs and lows, because these provide a lot of liquidity, okay? And in the market, the models that I take, right, are the trade models where price is either going to look to generate liquidity or look for liquidity. Okay, and I'm going to show you guys what that means exactly, okay? Now, coming into session right here, right? Coming into session, we're going to mark off the previous daily low, all right? We're going to mark off the previous daily low. We're going to come over here and mark off this previous daily high. All right, we're just marking off our key levels right here, okay? And now we're going to see what price could possibly do, okay? What is happening here? All right, what is happening here? And I'll show you what we got right here. Price is currently having a fair value gap all over here that already got rejected. Price is already within this fair value gap in itself right here. 4-hour fair value gap in here, 4-hour fair value gap in here. These are ICT concepts right here, right? So we're going to add our levels. Now, again, what did I say? That the daily time frame was bearish, okay? So to start off the New York Open, I do believe we could go bearish, and if we do, it's going to go to this previous daily low, or it's going to go to this previous daily low down here, right, where there is a level of generated sell-side liquidity. Okay, these are our liquidity levels. These are the levels I'm talking about when I'm talking about ICT concepts. Now, we're going to be able to take this trade from both sides, right? We're going to look for the trade to generate liquidity or look for liquidity, and then after it's already generated liquidity, and I'll show you guys what I mean by that. Now we're going to go down to the lower time frame. Now we're going to go down to the lower time frame, okay? Price is in our fair value gap. You know what that means. We're going to be looking for an entry now, right? So we're going to go to the New York Open, right? The New York Stock Exchange Open right around 9:30. And the 9:30 open will be right here. That opens up with a drop. Now, if price breaks under and retests some fair value gap, I'm going to ride it to the previous daily low level, okay? So price right here is going to create this fair value gap. Okay? But price misses it by a hair, okay? And that's perfectly fine. That is perfectly fine because price now reaches our previous daily low. our first trade setup didn't go through because we simply missed it by a pip, right? And I'm being completely honest with you right here. Even though right here it looks like we hit it, we missed it. But now this is the trade, the high probable trade that I'm going to be looking for. All right, the previous daily low price is now generating liquidity. Okay, this fair value gap has been used. Price is now generating liquidity, so I want price, if it holds at this level, to reach this previous daily high level. So in one day we'll be knocking out our previous daily low, right? And we're knocking out our previous daily high, which are very important because these are the high levels of liquidity. All right, so now we're going to go into the 5-minute time frame. Now that price has seeked out this liquidity, we're going to look to incorporate and add those fair value gaps to see if we can get an entry. So right here we get a push up, and then we finally get our first fair value gap, right? Our 5-minute fair value gap. So we're going to see what happens to price right here. Price breaks under, right? We're disrespecting it, but price breaks right back on top, showing me that the higher time frame is probably going to result in a wick, right? We're going to set our stops under there, and we're going to set our target right at that previous daily high all the way up here, all right? And we're going to ride this trade up and see what happens. And an absolute banger right here. 4 times our risk, right? Using a model where we generate liquidity, 5-minute fair value gap, and price rides to the next previous daily high. I can't make this up. One of the best trade setups, quick and effective, easy, simple ICT strategy that you simply use with already market structure and price action. This has been Alex. I hope you guys enjoy. This is a beautiful gem to start off the week. And I'm going to be dropping another video in the next 2 days, right? 3 videos this week. We're getting back to it. I told you guys, and deuces.